Yo, what's going on, people? This is your man Home Study back in the house, ready to drop that hot fire. So, I am back to give you guys some hot fire and some game. We're gonna talk about why why investing in real estate properties is a game changer. Because I own properties myself, and I'm here to give you guys a little info. So, before we get into that, let's do the annoying YouTuber stuff. Make sure you guys like, comment, and subscribe to the channel so we can grow this with your boy, and we can start doing this full time, and I can start giving y'all the game all day, every day. So, without further ado, let's get into it. So, number one, and it's steady income stream, right? And let me read a little bit what I wrote too. So, number one, steady income stream. One of the most significant benefits of a rental property is the potential for a steady and reliable income stream. Rent collected from tenants can provide regular cash flow, helping cover mortgage payments and other expenses. So, pretty much self-explanatory right there. So I'm gonna read all of these and give you a little explanation. So, what I would say is, just self-explanatory. You get you rent from whatever your tenants or Airbnb guests, whoever you got over here, and then from there, you put it towards your mortgage, and whatever you got left, you can put it in your pocket. So let's just say for conversation purposes, let's just say your your mortgage is $1,800. You charge somebody else maybe $2,000. So you just pay your mortgage off $1,800, and then you get the $200 to keep it in your pocket. Simple as that, right? Number two, appreciation. Over time, my bad. Over time, real estate properties have the potential to appreciate in value. This can result in capital gains when you decide to sell the property. Appreciation can significantly contribute to the overall return on investment. So, what does that mean? So, we're talking about appreciation. Let's just say you bought your house at $100,000, right? Let's just say you keep it for 10 years, it appreciates from $100,000 to $150,000. So now if you sell it now, you basically just putting $50K in your pocket, man. Let's just say it's a perfect world. You don't have any debts. You don't have any stuff you got to pay off, no liens or nothing like that. You just pay whatever you borrow from the bank, $100,000, and you keep the $50,000 in your pocket. Simple as that, right? Number three, leverage. Real estate allows investors to use leverage by obtaining a mortgage to finance a significant portion of the property's purchase price. This amplifies the potential return on investment as you control a valuable asset with a relatively small upfront investment. So, once again, if you walk, for example purposes, you want to buy another property, right? Let's just say you got one single family home and you're like, hey, I want to get another one. So what you can do is just say, hey, Mr. Bank or Mr. Investor that I'm trying to use your money. I can put up this house as collateral and you can see what I have and what my appreciation is, as we see number two. And then, hey, you can use that to build more, get some more properties and use those things as leverage, as you see. Number four, tax advantages, my favorite part. Rental property owners may benefit from various tax advantages. Deductions may include mortgage, interest, property taxes, insurance, maintenance costs, and depreciation. These deductions can help reduce your taxable income. So basically, just straightforward. You get your house. We got to pay taxes every year, and that can reduce how much taxes that you owe, right? So let's go to number five, portfolio diversification. Real estate provides an opportunity to diversify an investment portfolio. Having a mix of assets includes real estate properties can help spread risk and provide a buffer against market fluctuations and in other investment classes. So basically, if you got real estate, so That's that. So basically, you just gotta mix everything. So not only you got real estate, you may have stocks, you may have some bonds, you may have, any other thing that would consider an asset. An asset is something that puts money in your pocket. Liability is something that takes money out. So if you got an asset, you got something that's putting money in your pocket. So if you got multiple things putting stuff in your pocket, that's portfolio diversification. Number 6, hedge against inflation. Real estate is often considered a hedge against inflation as the cost of living increases, rental income and property values may rise, helping to preserve and potentially grow wealth over time. So what that means is, once again, you got your $100,000 house, right? So inflation goes up maybe like 2% every year, right? So if you got $100,000 house, and just based on inflation, not even really your equity or nothing like that, or just value, is gonna increase in value just because the value of a dollar went from $1 to about 85 cents or something, right? So now with the property that you got, it's gonna be worth more because the more money you have to put into it, that's the more money it takes to actually buy it. You understand what I'm saying? So that's why most people big money people, they put that money into real estate because it's just kind of like, okay, I can put my money here, I can let it sit, and it's going to actually gain more value because of inflation, right? And also just keeping that, the value of the dollar goes down. That means you have to spend more money to actually get it. So that's what I mean. So number 7, you got control over the investment. Unlike other investments, rental property owners have a level of control over the asset. They can make decisions about property management, involvement, and rental terms, which can impact the overall performance of the investment. So you have control over it. Basically, that's kind of self-explanatory. I mean, you can add a pool to a house. Well, if you're zoning, likes it, but you know what I'm saying? Like if you got a trailer park, you just can't throw a pool outside. But check your local zoning. But my point is, if you're in the house, you put a new refrigerator in there, put some new cabinets in there, do whatever you got to do to actually increase the value, opposed to just waiting years and years. You can force some equity, and you can force more money over your investment and your property that you have. So number 8, forced savings. Mortgage payments made by tenants effectively contribute to the equity and the ownership of the property. Over time, this can serve as a form of forced savings, building wealth through gradual reduction of mortgage balance. So, more forced savings, the more people that pay you, the more money you can keep in your pocket. So if somebody's paying your mortgage, that's more money that you put in your pocket, and more money that you can save, grow, and buy some more stuff. Number 9, my favorite, potential for short-term rentals. With the rise of platforms like Airbnb, investors have the option to explore short-term rentals, which can result in higher rental income, especially in tourist high-demand areas. Self-explanatory, so instead of just renting, and like we just said, we go back to the $100,000 house, the mortgage is $1,800, right? Let's just say if you rent it out and you in like Orlando, Florida, or something like that, hey, instead of getting $1,800, maybe you can get like $2,800 per month. So better than 18, right? So let's go to number 9, long-term wealth building. Rental properties can be a powerful tool for long-term wealth building, and a combination of rental income, the property appreciation, the tax advantages can contribute to the comprehensive, sustainable wealth building strategy. Self-explanatory like that. So that was my 10 things. I'm glad you guys are, here listening to this, and I appreciate you guys listening to me. And that was everything you guys need to know. So if you guys got any type of questions, anything, make sure you guys like, comment, and subscribe. And we shall see you back with another one. I appreciate you guys. Peace.